Welcome to this morning's edition of the MPC Markets Morning Call, 22nd of August 2025. I'm Mark Gardner, and I'll be running you through the overnight market moves. The stocks extended their losing streak to 5 days, which has not happened in a very long time. Basically on the back of the looming Jerome Powell speech, which will be basically be Friday night midnight or Saturday morning midnight, whichever one you want to call it. So in roughly about 16 hours' time. People have concerns over that because Powell knows that he's going and essentially, well, doesn't really need to play politics. And he's been the one who's been quite hawkish on rates, and obviously Trump trying to wrangle control there of, to get rates down. But there was mixed economic numbers. The retailers really did drag things down overnight. But we are starting to see some of the technicals turn. The Russell still remains a fairly strong buy, but seriously coming off a pretty low base. We've seen the hourlies turn to strong sells, and very key, the dailies turn to neutral in the S&P and the NASDAQ. The Aussie market, though, worth a special mention, 9,000. I think some balloons and streamers came from the ceiling somewhere at the ASX. Knowing them, they probably managed to release it in the wrong office. Positive earnings reports across the board, and a little bit more positivity yesterday. So we would be going gangbusters if our market leaders like CSL and James Hardie didn't get absolutely flogged on James Hardie was more mediocre to poor result, but CSL was actually a good result. We've seen in the financial review this morning a little bit of positivity for a change, with a story from Morningstar now saying that they're both great buying opportunities. So, if those guys had rallied, we'd probably be getting close to 10,000, I would imagine. They're very large parts of the index overall. We've got our resources sector rallying as well. So, but look. Obviously, the big show is the US, and realistically, you can see here the retailers, Walmart, Costco, getting absolutely hammered. The US market channeling a little bit of ASX attitude today. So despite the fact that Walmart raised its full year sales and outlook and beat for the 11th straight quarter, the market described it as mixed, and it got smashed 4.5%. So, and look, Walmart's kind of like the US stock market is to other indices around the world. It's and same with Costco. If these two sneeze, the rest of them catch a cold. They're such behemoths of businesses, and almost, to be honest, they're almost better than retail sales numbers in terms of the amount of retail activity. So, the weak sentiment across that retail sector, it's really affected a lot of these big box retailers. So Home Depot, Target both got hit this week, and a couple of the beauty retailers as well slumped. So there's been a little bit of damage in that sector this week, and obviously it's a little bit of a canary in the mine shaft in terms of the economy, which is what people are worried about. On the positive side, Boeing had a decent night. A potential major jet order from China. And technology stocks overall, they remain under pressure, but and I think this story will gain a little bit of momentum over the course of time. But there was a report out from MIT affiliated research group, which is very highly regarded. It's like, for technology, it's the Harvard of colleges, MIT. And the research groups has put significant doubt in terms of the artificial intelligence profitability. So the study claimed that 95% of organisations were getting no tangible returns or savings from AI investments. So they fueled a lot of investor skepticism, really, given that these companies have been driving the massive move here in the market overall. And if we start to see a slowing in the economy and people have got to make cuts, well, maybe they're not going to spend as much on AI, and maybe the market is overvalued, as we've been talking about over the last 2 days. So, and we also had initial jobless claims rose to 235,000, expected for 226,000, continuing a trend of weakening employment metrics. And as I've been saying for most of this month, or particularly since we've Ejan Tony, the Capitol riot attendee, has been appointed the Bureau of Labour and Statistics Commissioner, or he's about to be confirmed. I think these numbers, the 5th of September could really be breaking point for the market, particularly if we get a negative payrolls number. And then we'll get a little bit of panic, and rates will, the Fed will be forced into having to cut rates because of public pressure, and Trump will get what he wants. So, maybe he's not as silly as he looks. So, but the huge concerns are around what's going to be said. And in watching a few of, they're all up at Jackson Hole at the moment. It's a bit of a junket, let's face it. Just watching Bloomberg this morning, I saw a couple of interviews, and they all ruled out the once you sign up for the Fed, you're not involved in politics and blah blah blah. But look, if they want the Fed chair job, they know what they need to say, and so I think there'll be a fair bit of politicking. The only person who's going to have an honest word come out of their mouth all weekend is Jerome Powell, because he's, it is about a 1% chance that he goes back to that Jackson Hole symposium next year, because Trump, the moment Trump can get rid of him, he will be gone, which is in May next year. In the meantime, he seems to be stacking and trying to influence and bully a lot of the Fed members with the bait of, you'll be the next Fed chair. So, it's, politics is a dirty game, I suppose. Look, it wasn't too much movement in commodity prices overnight, I've got to say. We did see silver, copper, platinum and crude go up. I'm pretty surprised about platinum and copper, truth be told, considering the US dollar was up and we had weakening economic numbers, but, so la vie. Iron ore sort of drifted back a little bit, and uranium had a small bounce. And Bitcoin's hasn't had the greatest of weeks. There isn't a lot going on there in that commodity market at the moment. Our house view is, copper and silver and platinum are extraordinarily cheap here based on 50, 40, 30, 10, 5-year historicals particularly versus gold. And I think there is, in silver, copper and platinum particularly, there is definitely supply side issues looming. And if Putin doesn't play nice, or the Trump starts another Barney with the BRICS, 90 to 95% of the world's platinum and palladium comes out of Russia and South Africa, which are it's the R and the S in BRICS. So I would expect those gold silver ratios, gold platinum ratios to normalise over the course of the next 2 years significantly. If you're just reaching back to the 50-year average of the gold silver ratio, silver just to return to the average has got 50% upside. Platinum would potentially be somewhere more in the vicinity of 500% upside. So overall, I think, while gold's run, I think those fringe precious metals particularly will be, a better value there at the moment. And while copper is more of an industrial usage, but the rapid data center build out, it's going to need to be wired, and there's no other alternative with copper. And there's quite a few of the power grids need to be rewired as well. And there are some major mines that have the largest mines in the world that are getting near end of mine life, and there's supply deficits. So looming in copper. So I think at $4.40 a pound is probably, I think we could easily see that rally somewhere into the $6 to $7 range, particularly if the Chinese economy starts to pick up, because they are the largest consumer, and that's what's been holding down copper, is that they've had a fairly dour economy and dour housing market for 3 years. But if that Chinese housing market picks up, and then you've got data centers competing for it, and then a certain element of renewables competing for copper, there is going to be one hell of a shortage. So yeah. But in terms of earnings next week, I've had a very busy week, so I haven't got around to the lovely fancy calendar yet. But in terms of Australian earnings, we've got Wesfarmers, Fortescue, Woolworths, WiseTech. WiseTech holders, I was on the call yesterday. I would probably be getting out of that leading into the numbers. Yeah, we've got the likes of South32, Lynas Rare Earths, Qantas, Santos, NextDC, Ramsay Healthcare, and Reece. People will be nervous about Reece, I would assume, given the James Hardie result. And then in the US, you've got the big dog, NVIDIA. We've got out of China, we've got Alibaba, CrowdStrike, Dell, Snowflake, and Marvel and Autodesk. And yeah, so we'll be watching, particularly CrowdStrike, Snowflake, Marvel, Autodesk, Barber, and NVIDIA. Actually, nearly all of those, to be honest. As we've, at certain stages, we've had interest in those. We think that those Chinese AI hyperscalers are probably fairly cheap. They definitely are relative to the US. NVIDIA should report solid. It's pretty well covered. I think the only thing that will tear that down is broader market. But look, once NVIDIA's done, that's earnings done. So I still remain really quite bearish leading into next month. And I think a high balance of cash is highly recommended, or a hedge. So yeah, look, today I think for the ASX we got that 9,000 close, and I'm really pleased that we've finally shown a little bit of outperformance in the ASX. I think it's a long time due, but I think after the great performance, you can, and outperforming the broader market for the, I think we're up 1.5% this week. I think the Nasdaq's down 3%. So I would say the investors will take some money off the table, given the risk over the course of the weekend, and that negativity in that sort of tech part of the market as well. So, but for those of you who want to get a detailed view of the week, Bulls versus Bears will be out this evening on YouTube, and then Spotify, Apple, and Amazon and iHeartRadio over the weekend. And myself and Jonathan Takadena, or perhaps even Kai Chen today, and we'll give a broader wrap up of the week and generally chat markets and do a bit of have some reviews of some of the hits and misses. So if you don't listen to that, have a great weekend, and we'll chat again Monday.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.